Hey everyone, Darren here on Saturday, March 14th in the morning. Um, Before we begin, please take a minute and look at the legal disclaimer. As you very well know, I'm compelled to post a disclaimer with every video for liability reasons. So, with that, just take a few seconds and go through it. I suspect most of you are familiar with its content by now. Okay, with that, let's move on to the chart. We are looking at a weekly chart of the S&P 500, and let's really take a look at where we stand. Again, we had another pullback week this week. As you see, the Japanese candlestick is full, not hollow. So we closed below where we opened. And so we experienced a consecutive pullback week. Given that the S&P has been in a bullish mode for so long, several pundits and perma bears predictably came out this week, predicting the doom of the S&P 500, and a lot of negative comments like this came in to the news. Several technicians as well came out and started making negative comments. So let's put all of this into context. As you can see, I mean, the S&P has been on a bullish trajectory for quite a long time. The only time in recent memory where that bullish trajectory was tested was on this week right here, which is the week ending October 17th, 2014, which incidentally is my son's birthday. The index tested the midline of the super trend on that week, got under it intra-week, but then closed above the midline by the end of the week. Making it inconsequential. The following week, we saw some very powerful buying off that midline, and a follow-through week in the week after that. By the third week, we were back to where we were before that correction. And since that time, really, we've seen the index back and fill its way higher, a higher high here, a higher high a couple of weeks ago. And for 2 weeks now, we've been having this pullback, which has taken us to a closing level of 2,042 by yesterday evening. Looking at, again, the other indicators, we predictably are on red bars. So given that, with the pullback action, sellers have emerged and they have been controlling the price action for the past couple of weeks. Albeit it's important to say that these two red bars come above the midline. Again, nothing terribly alarming here. The composite remains positive, so above the pink line, which you can't see. So that's fine. Little bit of concern with the following three indicators. The trend filter is now tagging the red line, so that's definitely something to keep an eye on in the coming weeks. And relative strength, has pushed under the midline, but it has tended to do that even while staying on the right side of the super trend as compared to previous weeks. It's gone under it, so predictably, relative strength has been not as good as it had been in previous weeks. Our intermediate term momentum has a reading of -1, so has reverted to negative. But these tend to be more sensitive and more short-term oriented. So it's important to take everything in unison, and while really looking at everything. The main point being that we are still on the right side of the super trend, so we can only qualify the decline we've seen for the last couple of weeks as a pullback. Should the price close below the midline of the super trend for a week or certainly two, then we would have to then change our evaluation and treat the decline as a full-fledged trend change in the index. But we are not there yet by any means. Incidentally, the midline of the super trend currently stands at 1942, so exactly 100 points higher than where we are now, which again is a long way for the S&P 500. Now, given what I'm seeing with the momentum indicator here, relative strength, and the trend filter, there is a distinct possibility that we continue for in the coming weeks to pull back and possibly test the midline of the super trend. Again, obviously would not be buying during that pullback as the sellers are in control. For contrarian type investors or traders would wait for an area of support where the risk-reward parameters are more attractive, i.e. closer to the midline of the super trend, with a stop under the midline somewhere. That would be a better area to buy if one were inclined to do so. For anybody that's already holding U.S. equities or the index, would not really look to exit unless we had a trend change, which would be again a close below the midline of the super trend. With that, I will update you on a need-to-know basis, and certainly towards the end of next week. With that, have a great weekend, and I'll speak with you soon. Take care.